The recently passed Consolidated Congressional Act had all types of benefits for workers as well as for relief for small businesses. I'm Joe Galvin, Chief Research Officer at Vistage, and it's my pleasure today to have Matt Garrett, Vistage speaker and founder of TGG Accounting, with us once again to help us understand the nuances and, most importantly, what we need to know, what we need to act on right now as this act comes into play. Matt, thank you so much for joining us. Please share with us, what do we need to know?
Well, Joe, thank you so much for having me, and thank you to Vistage for being on top of this stuff. As we know, the president just signed this bill into law. There was 5,500 pages of stuff to weed through in there, but I would tell you there are really 8 things that Vistage members really need to know about and focus on. And we can go through those, Joe, at however you'd like to go through them. But I'm excited to kind of talk today about what it is and then what we need to do here or what the members should be thinking about doing here before year end.
Well, Matt, the ink is still drying on these 5,500 plus pages, but it seems to be cast far enough along that we can go forward from a planning perspective. The clock is ticking. December 31st is just a couple days from now. Let's start there. From a tax perspective, what are the things that people need to do and should be doing right now while they can?
Sure. I think the biggest thing from a tax perspective is 2 weeks ago, we thought 100% we were going to have to pay taxes on the amount of the PPP funds that we got, even if they were forgivable. Now we know 100% that's not going to be the case. And that's a huge positive benefit to businesses that took the PPP, followed all the rules, went through the forgiveness, got forgiveness, or are in the process of getting forgiveness, because now all that money is non-taxable. And practically speaking, what that means as it to do is you're going to have a lot less taxable income in 2020 than you thought. And what that means is you may want to start pushing expenses if you can. If you're a cash basis taxpayer, don't write those checks at year end. Instead, write them January 1st. That way, you're really managing your tax rate based on your overall taxable income, because you're probably going to have a lot less taxable income in 2020 than you thought just 2 weeks ago.
You had mentioned in our conversation, this is really a wrestling match between Treasury and Congress as to how this came down. What does it really mean to us, though, as business owners?
Yeah, really what happened here is the Treasury Department, and the IRS said, no, we're going to make this thing taxable. And Congress said, nope, sorry, we make the laws, you don't. You're there to interpret and enforce. And they clarified it and said, really, no, this is not going to be taxable, which is a huge boon to small businesses, because if you got, say, $500,000 in PPP funding, you could have been subject to as much as $250,000 in tax, both the state and the federal level. Now, the states have not obviously jumped on this as quickly. So there is some question mark as to whether or not the states are still going to tax the non-deductibility component of the PPP for the state level. That's still not out there, but at least at the federal level, we got relief, and that's a huge benefit to most people who took these PPP loans.
So can I assume then that the states will follow this, or should I reserve a portion, set aside a portion, and potentially have to pay that in the state?
I think it's a state by state thing, but I would be careful with your cash. It's really important in this time to be extremely careful with your cash, and we don't quite know what's coming. So I would definitely reserve a little bit, but make sure you talk to your CPA. That is the best place to go, because each of your tax situations is going to be different. And so you want to make sure you're maximizing those tax benefits, because you might have bought a big piece of equipment under the CARES Act, already reduced your taxable income down to such a level that this doesn't really matter. So really, everyone needs to be thinking about their own personal tax situation and their business tax situation first.
So that's clearly a big win, and that's clearly one of your 8 points that came out of this package. Walk us through the other 7, Matt.
Sure. So another big one is, and this is something that's been a little bit overlooked, and that is that this law just opens up the old PPP for new eligibility. So what that means is, if you were not eligible or you didn't take the full amount of the PPP the first time around, the eligibility window is back open. This means entities that couldn't take it before, like marketing organizations, housing cooperatives, newspapers, broadcasters, radio stations, all of those sorts of things are now wide open to be able to go back to the window. And if you didn't get all of your money, or if you just were ineligible for one reason or another, take a look, because you might be eligible this time around. The third, I guess, if we're on 3 here, the third thing that it did was it expanded the list of eligible expenses to include other kinds of covered operations. So not just the 60-40 split between payroll and occupancy costs. They actually include software, cloud computing, HR, and accounting sort of things, all in these eligible expenses for forgiveness. So that really helps a lot of people in terms of going and getting forgiveness, because it's going to broaden the base and allow you to get it over that period of time with more expenses.
But I still need to maintain that 60% of this goes to salaries. Is that correct?
That's correct. And those old safe harbors that they enacted are still in place. So if for some reason you couldn't rehire everybody, you couldn't quite get to those percentages, there were safe harbor rules on allowing you to get there. So those are still intact. So
But the
lots of
traditional,
options.
the
Go ahead.
traditional elements of mortgage and rent and other associated expenses, that can all fall into that 40% bucket. And that will be non-taxable event going forward as well. Is that correct?
That's exactly correct. If you do it the right way and you get forgiveness, again, the expanded group of expenses makes forgiveness even more possible for people. Again, gives you a better opportunity at forgiveness. And we are strongly suggesting that people get their forgiveness applications in as soon as possible.
Right. Okay. So then that would be 3. What would be the 4th? So
the 4th thing, that this is a really big thing, is that there's a brand new PPP out here. There's another $284.6 billion that got allocated to a brand new round of PPP for people. But this is one of the other takeaways here is that it's not for everybody.
Right.
So it's only for people who either didn't get it in the last round, as I was just talking about, or it's very targeted at bars and restaurants. So one of the things you might want to think about here is are you a bar and restaurant? You didn't get quite enough last time. You're probably eligible this time around. For all the rest of us, if you're not in the hospitality world, you had to have had a drop in gross revenue of 25% or more in either Q1, Q2, or Q3 as compared to Q1, Q2, or Q3 in 2019. So the comparison between Q1, Q2, Q3, either one of those quarters, if you had a drop in revenue of 25% or greater, you are eligible for the second round of PPP. If you did not have that, you are not eligible for the second round of PPP. Very important to understand that. And it's very important to work with your internal accountants to figure out how you are recognizing revenue. Make sure you're doing it on an accrual basis, and make sure that you're looking at it properly, because this is a huge opportunity to get a second bite at the apple with new PPP funds. And if you are eligible, it's important to be able to take advantage of it.
So most likely it would be Q2 2019 versus Q2 2020, Q3 versus Q3, year 2019 to 2020 comparison. Because what our data shows now, as of our December data, only 17% of our members have revenue loss of greater than 25%. Now, if we back that up into April, May, June, that number was a little bit higher, but it's going to be nowhere close to the 82% of our members who activated the PPP program in the first wave.
Yeah, and what I would say is that, listen, if you didn't have 25% or greater revenue loss, congratulations. You either did an awesome job, or you were in one of those lucky businesses that happened to be a spot that saw a big uptick. But for the most part, I think there are going to be more businesses than we think. I would assume that your figures would probably double if we take a real honest look at what revenue is and the definition of revenue for each of these businesses.
And I think if you step outside the Vistage client base that doesn't have a huge amount of hospitality, bar, restaurant, travel, those retail, those hard hit industries, and the aggregate SMB space, it's probably a broader number. But for our community, that's where the number sits today. So it's good news for us.
Yeah, it is. And we want to make sure we take a really hard look at the definition of revenue, which leads me to my 5th point. And that is that don't go out and worry too much about all of the administrative details on this. You want to think about your tax planning first, because as you said, Joe, there's only a couple days left in the year, but the SBA is required to come out with guidance on these administrative rules in the next 10 days. So we'll get more word out to you as we get clarification on some of these rules.
So if folks don't get a chance to listen to this prior to the end of 2020 and they're listening to it in 2021, what can they do, if anything, at that point?
From a tax standpoint, it depends on if you file on an accrual or a cash basis. If you're filing on a cash basis, you're probably stuck because you need to actually spend the cash or not spend the cash here before year end. It was one of the challenges in Trump waiting to sign this bill, is it kept everybody in limbo a little bit on whether or not to do tax planning for 2020. So it's very important, I think, for if you're a member, if you're a chair, share this with your other members and share this with other people, because we got to get decisions made in the next 2 or 3 days.
Okay, great. Thanks.
So there's a couple of other things. There's important things to think about here with this. I think if I'm up to 5 or 6, I don't remember my number, but I'm one of those. If you find yourself eligible for the new round of PPP, you can again get 2.5 times your average monthly payroll based on the 2019 calendar year or a 1-year look back capped at $2 million. So you're not going to get more than 2 million. But if you are eligible, if you fall in that 25% reduction in revenue in one of those quarters, this is a huge benefit again, and something that you want to take advantage of. In the hospitality world, you can go up to 3.5x, 3.5 times that payroll data.
So that's down from the 10 million max in the first wave.
That's right. They're trying to really look at this and go to the most affected businesses, which I think is a good thing and a healthy thing. And they're trying to make sure that they're being very targeted with the amount of money that's coming in.
Are there any,
like both of those things as a bill.
Any changes to the forgiveness rules?
So yes, there are a couple of administrative changes to the forgiveness rules. And again, I'm going to tell you, the SBA is going to finalize these, the administrative component of this. They have 24 days on this, on the forgiveness side, to come up with new forgiveness rules. But what this law did is it creates a simplified PPP loan forgiveness application for loans under $150,000, whereby the borrower just submits and a one-page certification to the lender, and that's it. That's it. Now, that said, there is a really important administrative requirement. I will tell everyone, you better have great records, and this bill requires you keep them for 4 years. I would tell you best practice is to keep them for 7 years. And make sure you've got some, we mentioned this before in previous webinars, Joe, but make sure that you've got some written explanation as to why you took the first round of PPP. And if you take a second round, that's absolutely mandatory that you have it written down, talked about, signed off by the board as to why you need this money.
Okay.
All right, let's think about, there's really 2 other big things in here that I want to talk about. One is this idle loans. Many people just took the $10,000 idle loans, and those had the effect of reducing the amount you could get in the PPP funds. This act completely repeals that, and it repeals the section 110E6 of the CARES Act, which again required PPP borrowers to deduct that amount from their loan forgiveness. So now you can get the full forgiveness and get the full $10,000 in the idle loan. And again, that's very important for many of our Vistage members.
So the EIDL loan sits outside of the Paycheck Protection Program. So if I didn't have the revenue hit, if I don't qualify for the PPP wave 2, I can still turn to the EIDL program to seek cash or loan if I need it under the rules of EIDL.
Right. That's right. And there are a whole host of things in here still to kind of unpack, if you will, but a lot of that's going to come in as we get guidance from the SBA on how to do this. The other things, though, that I do want to quickly mention are the tax side of it. That's not just the PPP side. And the tax side of that is if you had an SBA loan, it's going to extend that debt relief to you under the 504 or the 7A loans. So if you had an SBA loan before and you got that debt relief, you're going to get more of that. Starting again, an additional 3 months of principal and interest starting in February 2021. And again, going forward, that's a huge benefit to Vistage members who have those SBA loans. And then the last thing that's gotten a lot of publicity is this whole 3 martini lunch deduction. And I think it's important to understand where that's coming from. For many business owners, we use networking, taking people to lunch, dinner, whatever, as a sales tactic or a marketing tactic. And I think it's really good for Congress to acknowledge that and give full deductibility. It's jokingly referred to as a 3 martini lunch, but what it's aimed at is it's aimed at bringing the restaurant industry and the hospitality industry back by allowing businesses to fully deduct that amount from their taxes, as opposed to the 50% limitation we had prior to this law. So that's another big positive as we move forward into 2021. Does not affect 2020, but moving forward into 2021, that will be another positive benefit of this law.
Well, hopefully, as we get further into 2021, we'll be able to go out to lunch and be able to take advantage of that. But in the meantime, we're kind of quarantining for a little while here, at least.
That would be nice. That would be really nice.
You know, Matt, one of the things that wasn't in the bill that had been talked about was the business liability provisions, right? That's there's 2 sides to that sword, right? One is protecting workers The other is being able to go after those businesses that are egregious, like the meat packing industry. How do you see that playing out, if ever?
It was an amazing show to me of how powerful lobbies are. So it posed the Democrats who wanted funding for the state and local governments
Right.
against Republicans who wanted to do away with or wanted to limit liability. And the Democrats, 97% of the money from the Trial Lawyers Association went to the Democrats. And the Republicans, had just the opposite interests. And these guys couldn't come to any kind of an agreement on it. So I am of the mindset that if you're doing the right thing, we talked about this early on, if you're taking the PPP and going to buy a Ferrari, you kind of deserve to go to jail. If you're doing the right thing, using it for the right purposes, following all the rules, keeping really tight records, making sure that you have something in your files that shows why you needed the money, why you took it, and what you used it for, I don't think there's going to be massive liability issues outstanding. I really don't see that as a problem for most companies and most businesses.
Okay. So does that capture the big events of what came through the deal, the tax implications, the new rules around PPP, and what that means and how you apply it, and then the benefits into EIDL would be like the three big buckets?
That's the big stuff. And what I would say is the most important thing for our Vistage members to know right now is they need to talk to their CPA today, immediately, and figure out what they're doing for 2020, because their tax liability for 2020 just shrunk by some amount. And so what that means is, what does that do to your tax bracket? What does that do to, I mean, look, maybe it puts you at a loss position and you actually want to go and start to do personal planning. You're in an S Corp, it's flowing through to you. You might want to go and take an IRA and turn it into a Roth IRA.
Right.
That's all stuff you got to get done in the next couple of days. So you need to make decisions on that. Look at your tax situation and run, because you just got a lot less tax in 2020.
And again, once we get into 2021 and you can't do any of the cash things, you still have the ability to take advantage of all the tax provisions and the savings that that's going to bring through that was uncertain just a couple of weeks ago.
Absolutely. The worst case scenario here is you have a lot less tax to pay in 2020, and yay.
Yeah. From a forgiveness standpoint, the under 150K, you've got the EZ form, for lack of a better phrase, and above that, you still have to go through the process with your bank. The new PPP has the 8 or 24-week provision as well, I believe.
Yep. It's all the same, essentially the same, just with expanded uses of the funds, which is great, and expanded eligibility for people who didn't get to use all of it in the past.
Right. When do you think the windows will open for people to go for this money? I believe it says something like 10 days from signing, but SBA may not be that quick. We had the chaos and confusion in the spring when this first rolled out. What are your thoughts on that?
I think they're going to do better than the first time, because they've got more systems set up for it. So I would bet that the window is going to start to open by around January 15th, would be my guess.
Okay.
And that's, I think the key thing, Joe, for our members is to consider their organization. Make sure their paperwork's all together. Make sure you've thought about what it is that goes into that. Again, that gross revenue calculation. If you're going for that second bite at the apple, you need to make sure you get this right, because that's where that liability issue comes in. Is, man, if you screw up this gross revenue calculation and your revenue wasn't down 25 and you do take the PPP, you could be in real trouble. So you've got to make sure your accounting is correct and that your records are correct.
Okay, great. Matt, any last lessons or last comments? I feel like we've from a snapshot of just grabbing a hold of this thing and trying to figure out what it is, I feel like we've got our arms wrapped around the big components. Any last comments or last ideas you'd like to share with folks? We'll come back and do a deeper dive on this in a little, after the dust settles a bit.
I think that's the thing is we've got 10 to 20 days to get administrative rules from the SBA. When we get those, we'll know a little bit more about how to get all this stuff done. But I will say, 2020 has been just a dog of a year. It's been, whether you affected positively by it and your sales went through the roof and you were just, working as hard as you'd ever worked, or the opposite, you're working as hard as you work because it went the opposite way. This act, this work by Congress is a bit of a ray of sunshine that we can celebrate the year end with and say, whew, thank God we don't have to pay tax on that. And maybe we got another round coming and we have a couple of new tax breaks. I'll celebrate that, and cheers to hoping 2021 gets here quickly.
Well, there's no question 2020 redefined disruption, because it touched on just about every key on the keyboard. It touched in 2021. Hopefully we'll see better. We'll see a resolution to the COVID crisis as the vaccine takes hold. There's a lot of belief there's some pent up demand that we're going to take off and have another strong multiple years of up and to the right and growth. We just got to get through the next 3 or 4 months of darkness and hard times. And then hopefully there's even optimistic that there may be a third stimulus coming down at some point when the new administration takes hold. So Matt, again, I'd like to thank you so much for being so responsive, so immediately for us to help our members through this. And to all of our members, hope this helps, hope this clarifies some things. We'll follow up with more details in a couple of weeks when the details come out. So thank you, Matt, on behalf of Vistage Research, and thank you to all Vistage members. 2020 is a year we're going to remember for a long time. But I personally, and I hope you are as well, looking forward to a very memorable 2021 for a lot of different reasons. So with that, we'll say thanks again, and we'll come back to you in a couple of weeks with more details. Signing off, Joe Galvin, Vistage Research.
Thanks, Joe.